In today's session of Visual Jforex, I will be continuing with the demonstration of the algorithm development using the indicator block named minimum maximum, which is short named as min max. This is simple to understand as the name suggests. We basically look at the minimum and the maximum value over a given period of time, and depending on the fresh breakout, we will be looking for the initiation of the trade. So this is the charting for the min-max with the time period of 48 on the USD JPY chart of 15 minutes time frame. So when I am taking into consideration the 48 candles of 15 minutes each, we are basically looking at the price action of last 12 hours. Now we will head to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. In prior session, I had done the setup where the instrument subscription has been done with the default instrument defined as USD JPY, and the position amount has been defined at 0. Then I got these 4 min-max blocks of 15 minutes time frame with the time period of 48. I think here I missed changing the time period. It should be of 48. Okay, now it looks good. Shift values are different, 1, 2, 5 and 24, to do the comparison, to see how the price action has unfolded. To look at the immediate price action, we will also be taking into consideration the various characteristics of last couple of historical candles. Here, these are 15 minutes candle with shift 1 and shift 5. And then to pinpoint the exact entry and exit point, the 10 seconds candles are also going to be used. Now in today's session, I will be defining certain conditions which need to be fulfilled before the execution of any trade. So I will explain to you briefly what are certain conditions which we are going to define. We need enough of volatility in the price action and to make sure that there is enough of momentum while we are looking for the fresh breakout. We will be setting some conditions. So here, one condition is going to be that there should be the difference of more than 7 pips between the last 15 minutes candle close and the 15 minute candle which has closed 1 hour back prior to this candle. So we will be taking the two historical candles with shift 1 and shift 5 and then looking at the difference between the two. And here, as you can see, the closing value. Now if this is the shift 1, as this is the fresh breakout, here we will be looking for the trading opportunity. And this is shift 1, shift 2, shift 3, shift 4, shift 5. So we will look at the difference between the closing values, and this is good enough, more than 7 pips. And we will also need the last 15 minutes candles opening and closing values to be apart by at least 3 pips. The closing value should be more than 3 pips compared to the opening value. So we will also set that condition, and to make sure that we don't really lose too much money in case substantial move has already happened, and as a result of that, if we see that too much risk might creep in the initiation of the trade. So one more condition is going to be that this difference between the candles of 15 minutes time frame which we have defined for initiation of the trade at 7 pips, the upper limit will be of 15 pips. So we will have the band of around 8 pips starting from 7 pips and ending at 15 pips, within which the trade can be initiated. Also, for setting the stop loss and target, I think we can keep the stop loss and target dynamic. So this difference will be the difference which we will also use as the stop loss, and twice of it can be considered as the target price for the trade. Now we head back to the Visual Jforex platform. First, I will need to define 3 variables which will yield the values of 3 pips, 7 pips and 15 pips. For that, I will need to take 3 calculation expression blocks. Here it is 1, 2 and 3. Okay, 3 identical sort of calculations are needed to be done. Okay, and I will join this flow, and we will have to take into consideration the pip size, default instrument pip size, which we will then multiply by the numerical value of desired pips. I will now need to create new variable. This will be the upper limit variable with the value of 15. One more will be minimum variable. Okay, 7 pips, and another will also be needed to look at the 15 minutes candle difference. This will be 3 pips. Okay, now I will take these 3 variables and multiply this by default instrument pip size. So the result is going to be A1 into A2. Here also the same thing, A1 into A2, again A1 into A2, and this will be upper limit, this will be lower limit, and this will be minimum condition. Okay, so here I have set these 3 conditions. Now we also have to look at the actual values, what is happening in actual world, and then we can compare the actual values to the desired values which we have defined and see if the conditions are being fulfilled. So now we have to take another calculation block and then look at the actual price difference. So here we are going to need that the last 15-minute candle opening and the closing price should be apart by more than 3 pips. Closing value should be on the higher side, so we need candle 17's closing value first, and then we will deduct the opening value, and the difference should be more than 3 pips. So I am going to require the candle 17's closing value, which is there under the auto created variables. This is the candle 17 candle close, and then candle 17 candle open. A1 into A2. And result of the calculation, candle open, what we will name it, we will name it actual candle difference. Okay, so we got this. And then we will also need to look at the calculation for the finding out of the difference between the 15 minutes candle 1 hour apart. For that, I'm going to need the closing values of candle 17 and candle 19. And here also candle 17 needs to have closed higher compared to candle 19. So we will need to deduct the 19th value from candle 17th. With the difference we will get needs to be more than 7 pips. Auto created variable. So again candle 17 candle close and candle 19 candle close we will need. Okay. And this needs to be A1 minus A2, and this will be 1 hour candle difference. Okay, so this is going to be the actual difference. And now comes the question of carrying out certain calculations for the defining of the stop loss and target price. But as I see that it will take some more time, so instead of continuing in today's session, I will add the other calculation expression blocks in next session. So here we wrap it up. We will need to save this file, and we have done certain calculations which will lay the base for the algorithm. These will be the conditions which need to be fulfilled. So in next session I will add the buy side, and then we will also define the conditions for the sell side in subsequent session. And one more thing which will be needed to be done is going to be the defining of the stop loss and target price in a dynamic way. This time around we won't be going with a static stop loss and target price. So that's it from my side for today's session. If any of you have any idea or any query, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Thank you all for joining in. See you next time. Till then, goodbye.